Taking a look at some stocks that had strong activity around them on Friday, resort savings and loans accounted for over 60% of volumes on Friday, 400 million shares of that stock traded. What is your take on why there was so much activity around the stock particularly?
I think it was really internal shareholders taking bigger positions in resort savings and loans in lieu of expected stronger results coming in by the end of the year.
And what are the thoughts on results there? What's going to be driving that mortgage company?
Resort Savings and Loan is trying to expand its mortgage reach, and it's expanding its branch network in Nigeria, and is expecting on the back of that to have stronger client flow from increased mortgages.
Now, looking at the banking sector, we did have a strong rebound in most stocks. Just looking at Intercontinental Bank, up over 3% on the day. Diamond Bank, 1.6% to the good. Unity Bank, almost 4% in the positive. There was an analyst report coming out from Renaissance Capital saying that they expect stronger earnings from banks in the coming quarters as non-performing loans decline, and we also have a rebound in earnings on the result of a higher interest rate environment. Do you agree with this, and which banks will be able to capitalize on these higher interest rates and pass on the cost to consumers?
I don't totally agree with the analyst report, because in a sense, the banks, their main source of income is interest from loans. Now, the NPLs have been taken off by AMCON and they've been replaced by an interest yielding asset. But the interest yield on the asset is less than the average performing loan would provide. So while there'll be an increase in income because some of those non-performing loans or not interest income coming from it, it's not big enough, I don't think, unless they can increase their loan books by significant amounts to replace it. And we're seeing that in the Q1 results that many of the banks have come out with, where their turnover is down significantly and income as well as profit is down as well.
So let's break it down into the banks. Which of the banks do you think will be able to grow their loan books and counter the effect of these higher costs to them of these higher interest rates? And which of the banks would you be staying away from given their incapacity and inability to be able to do this?
I think until the rescued banks have their recapitalization process sorted out, they're not going to be in a position to take a strong push to take advantage of this. I think the likes of GTB, Zenith, First Bank that have more secure positions are in a better position to do this. But bearing that in mind, the banks like Zenith and GTB that have a high corporate banking clientele base, is going to be difficult to pass this on to those clients, because in the high-end corporate sector in Nigeria, it's very competitive, so it's very hard to pass on these costs to those customers.
It's interesting, moving on to Diamond Bank. Interesting, they're coming out saying that they're refocusing on the SMME sector. They've said they've lent around 40 billion naira to small enterprises in the last around 3 years. So is this a good move for them, focusing on smaller businesses, given the high default rate that they're seeing in the big corporate banking space?
It's a good move if they can have the risk management structure. The problem with the SME sector is that the credit work you have to do is the same for bigger clients, probably even harder, because a lot of these companies might not have the accounting and financial reporting framework that bigger companies do. Focus on that sector should be a big growth sector. For the Nigerian economy to grow, the SME sector has to grow remarkably. And so it's a good idea to get a foothold in that sector. But then you have to have the right risk management framework to ensure that you don't end up in another non-performing loan situation.
So Diamond Bank, on the back of this strategic move, would you be buying them, or would you be waiting to see how the strategy plays out?
I'll be waiting to see. I mean, Diamond Bank is coming back from pretty poor results in 2010. And I think this change of strategy is from the new management that's been put in place. Now, this new management is going to be, probably needs about a year, I think, to embed itself and embed this new strategy. So I think I'll wait on to see how the strategy is embedded and the new management fits in before making a move.
Now, looking at one of the larger banks, sad news last week is that one of the founders and the CEO of GTBank passed away. Is there any concern about his succession plan as the new CEO hasn't been announced to date?
I don't think so. GTB has pretty good corporate governance structure compared to the Nigerian market. And the deputy managing director has been acting managing director for the past few months. So I think they're probably just waiting to put all the places in place to make an official announcement.
Let's move out of the banking sector and into more economic news coming out. Kenya's inflation rate ticking up last month to 12.4% from 11.3% in April. Is there any concern about this rising inflation rate, or is it contained within the interest rate environment that we have at this stage?
I think there are real inflationary fears in Nigeria. We've seen, if you look at the inflation figures, the real rise were in things like diesel, kerosene, and building materials like cement, which we've seen remarkable increases in the last two to 3 months. Now, there have been moves to try and address the issue, and the NNPC is moving in to try and address the diesel and kerosene shortages that have been recorded in Nigeria. And the president made an intervention to try and get cement prices down. But I think if you look at the second half of the year and you look at increased oil prices, and which will lead to increased subsidies in the fuel sector, even if those subsidies are removed and fuel prices are allowed to go on market rates, you probably see inflationary pressure there as well.
What are your expectations then for interest rates going forward? Do you think that the central bank has been aggressive enough in containing the rise of prices?
There's only a limited amount of there's only a limited effect of the MPC's rises on the interest rate environment, because there are some structural deficiencies in the Nigerian economy that have inbuilt inflationary pressures, and the CBN governor alluded to this a couple of days ago. I think the MPC will increase interest rates in the next meeting, but I think what is really required is some structural changes to the Nigerian economy by the new government.
Looking at political developments which have implications for the broader economy, is it a concern on the ground that we still don't have a new cabinet announced specifically with regards to key ministries like the finance minister and the petroleum minister?
It is a worry. I mean, we've had elections over 6 weeks ago, and we would have expected at least the personal aides in the presidency to have been appointed, which they haven't been yet. In terms of the ministers, everyone's looking out for the finance minister and the petroleum minister in terms of the PIB, and also the finance minister to lead the economic direction of the government. And I think, especially with the Senate not expected to be back till next week, everyone's hoping the Senate comes back early and the ministerial list comes through so investors can take a position and the economy can start moving again.